If this stablecoin transparency bill was passed first before the Digital Commodities Act, which is the other big initiative right now, it'd be like bringing Led Zeppelin back. If it happens, I speculate that all crypto assets would appreciate overnight by 10%.
Why are you bullish? What are the bullish signs that you're seeing?
I've seen this movie before. The time to be putting capital to work is when there's blood rushing through the streets. And that's happening in crypto right now. All of these bankruptcies, defaults, changes in management, it's a cleansing that's going on. It's a very difficult time to fund new projects, and any valuations that people thought they were going to get 4 months ago are being cut in half, sometimes down 60%. But the good ideas, and the way to look at this, in my view, and I'm fortunate, I spent a lot of time teaching graduating cohorts of engineers, MIT, Waterloo, Temple, wherever they are, Harvard Business School guys. When you meet those cohorts, a third of the class are entrepreneurial. And so I'm doing this selfishly. I like to see their projects before the VCs do. So I'm sitting in the class and we go out for beer afterwards, whatever. Here's what I've come to. I've come to this realization. If you ask them where they want to work, these are the brightest men and women on earth. To get into MIT, you basically need a perfect math score. Mm-hmm. They don't care what country you were born in. You've got to be the best of the best. And some of those dudes are very eclectic people, I have to tell you. But they don't want to work in manufacturing anymore. They don't want to work in the existing 11 sectors of the S&P. They want to work on the chain. They believe that the biggest opportunity for them personally is to work in this nascent space that, and the analogy would be back at the beginning of the internet when only pornography was streamed. That was it. We're at that stage now. And so my argument is to any investor, you can't pour that much intellectual capital into a space and not expect extraordinary outcomes, because those are the people that are going to redefine industries using this technology. I believe that, and I invest in them. And that's why it's good to put money to work now, because every day another cohort comes out. Remarkably, we're doing some pretty stupid things. We're throwing them out of the country. They should stay here, but they go and work in the Caribbean islands or the United Arab Emirates, wherever they can go to. They're the best of the greatest and the best, and we kick them out. That's nuts. It's a different problem. But the investment thesis is you go where the intellectual capital is going. That's why a 20% allocation to crypto at this point, at these prices, is a very good idea. I think we're at a phase now where we've stalled out. I talked about the price of Bitcoin. It's not going to go over $22,000 till we have regulation. There's just no capital to move it. It's going to be stuck in this trading range 18 or 22 for 2 years until whatever the Commodities Act gets done or whatever. And you have to realize that. Now, I will say there's capital still going into Bitcoin miners because they're getting awarded coin at 7,000 to 8,000 if they have scale. So it's still profitable, but nobody will fund the early miners that used carbon-based electricity. So those guys are screwed. It's too bad. But the new projects are ones that are using hydroelectric in places like Norway or solar or so there's still places for capital to go to work, but there's a pause for policy. Mm-hmm. And it's never has the anticipation been higher than it is now. Everybody is getting bored with the status quo. And the U.S. has to wake up and get its poo-poo together and start regulating this stuff. So I'm not in the camp that says we need to place the original founders of crypto and decentralize and let's fight the government. Screw all that. We know that that's not going to work, and we know that no one's going to make any money if that's the case. That's a bad outcome. The better outcome is regulate the applications on the chains that should be regulated. The policy exists for some of it. Put policy out on stable coins first. I hope that we consider Bitcoin and other token-based opportunities commodities. If we're going to fractionalize NFTs, maybe there are securities. There's all this stuff. But right now what we have is turf wars. Turf wars between the regulators. Openly declaring turf wars with each other right this morning on CNBC. No, it's my domain. No, it's my domain. Of course they want to control it. But at some point, the role of the Hill and Congress is to decide, make a decision. It won't be perfect. In the case of stablecoins right now, what held up that bill were the states. They're not happy. Well, tough. We got to get this thing done. And we got to move on. And we can tweak it, but it's very frustrating at this point. And I think I speak for a lot of people the same way from the institutional side. It's time to get our act together. We're going to keep losing talent. People are going to go work, on some Caribbean island, not where they should be in the United States. This is very important stuff, and we shouldn't be losing our talent because we can't regulate it. That sounds dumb. Essentially what Jamie said there, he was talking his book. This is my interpretation. He feels threatened by some of this technology, particularly around payment systems, because banks make money transferring assets. It's a cost of friction in the system. And one of the only reasons that I invested in Circle, and I'm an investor in Circle, I'm supporting their initiative, and I'm a big believer in what stablecoins can do, is it's time to get rid of that friction. And it's not important that banks be protected so that they can make fees from that friction. When you transfer the US dollar into the Swiss franc to buy Nestle on the Zurich exchange, these banks add zero value. There's no value created in ACH transfer fees. If we could use a stablecoin that was regulated and approved by both sides of that transaction, it would be more transparent, it would be much faster, it would definitely be more productive, but above all, I would save millions of dollars. And so would everybody else. I can't wait till we can do that, because that kind of innovation should be supported, and it is. And that's why we're all here. This isn't about, speculation on asset price. This is about reducing the fees of how the world's economies work. More transparent, more productive, completely auditable, regulated, but less expensive. So does Jamie Dimon feel threatened? You're damn right he does. That's a big part of how he makes money. Too bad. There is a social mission here. That is a good thing. But it is not going to solve a different problem we have right now. The reason we're stuck in a very low momentum state in crypto and blockchain right now is the lack of regulation that keeps the institutional investor out of this space. For all the excitement about stable coins and Bitcoin and all the projects and Ethereum on down and Polygon and Miston and everything that's coming, the truth is that none of it is owned by institutions. Zero. And so everybody likes to say, yeah, that's not, but sovereign wealth and pension that I service in the indexing business, and there's many people do what I do, we create indices so that they can invest capital. They are waiting for regulation before they index. And so if all that happened was sovereign wealth funds put 1% to 3% into maybe 6 different projects, it would definitely be some Bitcoin, there'd probably be some Ethereum there, maybe some Polygon, maybe a little Solana, whatever they want to do and what indexers would do for them based on market capitalization. That's $1 trillion worth of demand. But none of it is going to happen until we get some policy. And the truth about this is, and I'm happy to just say it the way it is, there are countries that are advanced. There are places like Canada where they allow broker-dealers now attached to accounts, and Canadians can do that. They've got millions of accounts open now. The UAE, Switzerland, France. But the real money, the sovereign wealth capital, is never going to move against the SEC. Never going to happen. And the reason that occurs is that if you're a sovereign wealth fund or a country that's oil rich perhaps, you're generating $250 million every 12 hours. The only place on earth you can put that is in the S&P. The only way you can do that is being compliant with the SEC rules. They are never going to make a move against the SEC in any way until these rules have been determined. So we are being kept out of institutional capital, and Bitcoin is not going to trade above $22,000 until we get policy. Interestingly enough, and this is a personal speculation, if this stablecoin transparency bill was passed first before the Digital Commodities Act, which is the other big initiative right now, it'd be like bringing Led Zeppelin back. If it happens, I speculate that all crypto assets would appreciate overnight by 10% because it would signal the move for policy. So we should all support the initiative of everybody, and there's other people involved in this. You shout out to Sheila Warren and Perry Ann Boring, who spend countless hours educating legislators on the Hill. Their missions are important, but there's a lack of knowledge with the government we have to get over this hurdle. So even if just stablecoins, that one thing got policy. And remember, when I go up there, I keep telling these guys, it's just software. It's productivity software. It's not scary. If you buy Microsoft for your office and you're typing on Word, that's software. That's a productivity tool. A stablecoin is just software that allows for more productivity and transfer of assets at a much lower cost, much more productively.